Have you ever wondered why some people seem to get rich with crypto, while others lose everything overnight? What separates smart investors from those who fall into the same traps over and over again? Cryptocurrency might seem like a golden ticket. It's also a minefield for the unprepared. Today, we're diving into the most common mistakes people make when investing in crypto. From emotional decisions to overlooked security risks, we'll cover everything you need to know to protect your wallet and grow it wisely. So buckle up, because understanding these errors could save you thousands or more. Crypto is exciting. It's fast-paced, full of innovation, and has changed the lives of millions. But behind every success story, there are countless cautionary tales of people who jumped in without a plan. It's easy to get caught up in the hype, especially when your feed is full of moonshots and millionaires. But the truth is, smart investing takes more than luck. It takes knowledge, patience, and discipline. In this video, we'll walk you through the most frequent pitfalls that trap beginners and even seasoned investors. Whether you're just getting started or you've been in the game for a while, this guide is packed with insights that can help you avoid the common errors that drain portfolios and shatter confidence. Think of it as your crypto crash course in what not to do. Some of these mistakes are obvious, others are subtle, but all of them are costly. And while the crypto space might feel like the Wild West, there are rules. Most of them aren't written down, but the consequences of breaking them are very real. That's why we're here, to help you see them coming before it's too late. So stick around as we break down the biggest crypto investing mistakes and, more importantly, how you can avoid them. If you're serious about building wealth in this space or just don't want to lose your shirt, this is one video you can't afford to skip. One of the biggest mistakes people make is diving into crypto without understanding what they're buying. Many new investors throw money into trending coins they saw on social media, without researching the project, the technology, or even the team behind it. This is like investing in a company just because it has a cool logo. Without due diligence, people end up holding worthless tokens when the hype fades and reality sets in. Another major error is putting in more money than one can afford to lose. Crypto is incredibly volatile, and while the upside can be massive, the downside can wipe out savings in days. Some investors treat crypto like a lottery ticket or a retirement plan. They invest, rent money, or take out loans to chase quick gains. When the market dips, panic sets in, and those losses hit much harder than they should have. Timing the market is another trap that gets many people wait for the perfect dip to buy or try to sell at the exact top. But the truth is, even seasoned pros rarely get the timing right. Trying to outsmart the market often leads to paralysis or poorly timed trades. Instead of consistent growth, investors wind up missing out on long-term gains while chasing short-term perfection that rarely comes. Emotional trading is perhaps the most destructive mistake of all. When prices soar, fear of missing out FOMO kicks in, leading people to buy at the top. When prices crash, panic causes them to sell at a loss. This cycle of buying high and selling low is the opposite of smart investing, yet it happens every day. Emotions are powerful, and in crypto, they can be your worst enemy. Security is another overlooked area. Many investors keep their crypto on exchanges, trusting them with everything. But exchanges get hacked, go offline, or even collapse. Without using secure wallets or enabling two-factor authentication, people leave their funds vulnerable. It's like storing cash under your pillow and hoping for the best. A little caution can go a long way in keeping your assets safe. Finally, people often ignore tax implications. Depending on your country, crypto gains are taxable. Yet many investors either don't know this or don't prepare for it. Then tax season comes and they face unexpected bills or penalties. It's crucial to treat crypto as real money, which it is on. Keep accurate records. Ignorance isn't bliss when the tax office comes knocking. Another critical mistake is chasing hype without verifying utility. Projects that promise the moon but don't have a working product or even a clear use case can collapse overnight. Investors rush in because of flashy marketing or celebrity endorsements. But if a coin doesn't solve a real-world problem or lacks adoption potential, its value is likely inflated. Smart investors ask, what does this actually do? Before clicking buy. Lack of a defined strategy also hurts many investors. Some buy and sell at random, based on gut feelings or influencer tweets. Without a clear plan like dollar-cost averaging, portfolio balancing, or setting profit targets, it's easy to become reactive instead of proactive. A strategy not only keeps you grounded during market swings, it also increases the chances of steady, long-term growth. Neglecting education is a silent killer in crypto investing. Many people want fast results without putting in the time to learn the basics: blockchain mechanics, tokenomics, or even how wallets work. This lack of knowledge makes them vulnerable to scams and poor decisions. Taking time to study the space, even just an hour a week, can make the difference between success and disaster in the long run. Overtrading is another trap to watch out for. Some investors become obsessed with checking charts every hour, buying and selling constantly to catch micro gains. But frequent trading racks up fees, increases tax complications, and often leads to burnout. Most of the time, the best move is simply to wait. Being active doesn't always mean being productive, especially in crypto, where patience can pay better than speed. Trusting unknown platforms or get-rich-quick schemes is sadly still common. From fake wallets to sketchy DeFi projects offering unrealistic returns, bad actors prey on uninformed investors. If something sounds too good to be true, it probably is. Always double-check reviews, look for audits, and understand the risks before putting money anywhere. Remember, in crypto, your money is only as safe as your decisions. Lastly, many investors forget to secure backups of their recovery phrases or private keys. Losing access to your wallet because of a broken phone or hard drive crash can mean losing everything. There's no forgot password button in decentralized finance. Writing down recovery phrases and storing them securely offline is essential. It's not glamorous, but it's one of the smartest moves any investor can make. Overconfidence after a few wins is another common pitfall. When someone doubles their money quickly, they might start to believe they've mastered the market. This leads to reckless investing and riskier trades. The reality is that luck often plays a huge role in early success. Without a solid strategy, overconfidence can turn into overexposure and, eventually, serious losses that could have been avoided. Ignoring diversification is a mistake inherited from traditional investing. Many crypto investors go all in on a single coin, often Bitcoin or the latest meme token. While focusing can bring high rewards, it also increases risk dramatically. A better approach is to diversify across several projects, sectors, and even asset types. This reduces the impact of any single coin crashing and helps balance out the portfolio. Following influencers blindly has become an epidemic. Social media is flooded with so-called crypto experts promoting tokens they were paid to mention. New investors often trust these figures without verifying the information. This can lead to pump-and-dump schemes where hype is created just to sell off at a profit. It's crucial to question every source and avoid herd mentality when making financial decisions. Underestimating fees and transaction costs is another costly error. Many blockchains, like Ethereum, can have very high gas fees during network congestion. If you're making frequent trades or moving assets around, these fees add up quickly. Some investors don't calculate this into their profit margins and end up losing money even when trades seem successful. Always factor in all costs before executing transactions. Lack of long-term thinking is also a major issue. Many people treat crypto as a get-rich-quick scheme instead of a long-term investment. They chase the next big thing rather than building a sustainable strategy. Those who survive on Thrive are often the ones who hold quality assets, reinvest, and stay consistent. Patience is key in a space that moves fast but rewards those who stay grounded. Lastly, ignoring regulatory news can be dangerous. Laws around crypto are constantly changing, and ignoring them can lead to frozen assets or legal trouble. Whether it's a new tax rule or a government ban, staying informed is part of being a responsible investor. Signing up for news alerts, following reputable sites, and understanding your local laws can keep you ahead of surprises that sink unprepared portfolios. Failing to set stop-loss or take profit levels is another technical error that costs people dearly. In volatile markets like crypto, price swings can happen in minutes. Without automated limits in place, investors either miss out on gains or suffer deeper losses. Setting rules for when to exit both the upside and downside removes emotion from the equation and helps maintain discipline in chaotic situations. Trusting unverified decentralized applications, or DApps, is becoming a new kind of risk. With the rise of DeFi, countless smart contracts are created and deployed daily. Some aren't audited, others are outright scams. Just because a platform looks slick doesn't mean it's safe. Before using any dApp, check for smart contract audits, developer reputation, and user reviews. Due diligence here is absolutely critical. Ignoring stablecoins as part of a balanced portfolio is also a strategic miss. While they don't offer explosive gains, stablecoins can protect capital during market downturns and provide liquidity for new opportunities. Holding a percentage of your portfolio in USDT, USDC, or similar assets adds flexibility. It allows investors to stay in the market without being fully exposed to price volatility at all times. Confusing speculation with investing is a mindset problem. Some people think buying random coins with catchy names is investing, but that's gambling. Real investing means understanding the asset, its use case, and its long-term potential. Treating crypto like a casino chip invites reckless behavior. A proper investor mindset is cautious, curious, and constantly learning, not blindly rolling the dice on every new token. Another risk is failing to rebalance your portfolio over time. As prices shift, one asset might grow and dominate your holdings, increasing risk without you noticing. Rebalancing, selling a portion of overperformers and reinvesting in underweight assets helps maintain your original risk profile. It's a simple technique that many ignore, but it can greatly improve long-term returns and reduce portfolio stress. Lastly, underestimating psychological fatigue is a silent but serious issue. Constant price watching, FOMO, market crashes, and Twitter hype cycles can exhaust investors mentally. Burnout leads to poor decision-making and emotional reactions. Taking breaks, setting screen time limits, or using automation tools can reduce stress. Crypto isn't just a financial game, it's a mental one, and maintaining focus is a hidden key to success. Investing in crypto isn't just about picking the right coins, it's about avoiding the wrong habits. Emotional decisions, lack of research, and overexposure to risk are some of the biggest reasons people lose money. The good news? Every mistake we talked about today can be avoided with the right mindset and preparation. Crypto rewards those who take the time to learn, think critically, and manage their decisions like professionals, not gamblers. By understanding the pitfalls and building a disciplined strategy, you position yourself not just to survive in the crypto world but to thrive in it. Remember, the most successful investors aren't always the ones who make the most trades, but those who make the smartest ones. Being aware of the common traps puts you in a much better position than most, and with a steady approach, you can grow your portfolio while protecting it from avoidable losses. More importantly, avoiding these mistakes doesn't just save you. Moneyette gives you peace of mind. You won't be staying up all night watching charts, stressing over whether to sell or hold, or regretting impulsive trades. Instead, you'll be confident in your plan, clear on your goals, and prepared for the inevitable ups and downs that come with this revolutionary yet volatile space. So, take a step back, review your current crypto strategy, and ask yourself honestly, am I falling into any of these traps? If so, now is the perfect time to correct course. Because at the end of the day, crypto isn't a race to get rich fast. It's a journey to build smart, resilient wealth over time. Thanks for watching. If you learned something new or realized you've been making one of these mistakes, don't worry, you're not alone. The crypto world is still evolving, and so are its investors. Drop a comment below and let us know what mistakes you've seen or made, and how you've learned from them. And don't forget to like, subscribe, and hit that notification bell so you never miss a video packed with tips to grow and protect your crypto investments. See you next time. And remember, knowledge is your greatest asset. The more informed you are, the better your chances of making smart, confident decisions that actually move you forward. This channel is here to support that journey, whether you're here to build long-term wealth, stay up to date with crypto trends, or just avoid falling into the same traps others have. So if you're serious about your financial future, make sure to stick with us. If you have questions, suggestions for future topics, or stories you'd like to share from your own investing journey, we'd love to hear from you. The comment section is always open, and our community grows stronger with every voice that joins the conversation. Crypto is complex, but you don't have to navigate it alone. So, until next time, vest smart. Stay curious, and don't let hype make your decisions for you. Your future self will thank you.